Welcome back to another post-trading analysis video. And if you're watching this, bro, it's 2 in the fucking morning, guys. It's 2 in the morning, and guess what? I am tired as fuck, and I'm still recording this video. Not particularly for you guys. Of course, you guys also keep me accountable, but I have told myself that this YouTube is going to be my own personal trading journey or journal, and I'm recapping every night, every vid, Unless I'm not behind my PC or I'm traveling or I'm doing this, I'll recap it later. But now I'm home, so I cannot be lacking. Okay? I can't be lacking. So it's 2 in the morning and I'm making this fucking video. Traders, we don't sleep. Okay? We don't sleep. Because trust me, I will be here tomorrow morning at 8. Okay? So making this video is deducting my sleeping time, but you need that momentum in life, so you just got to keep going. About this Pepe trade, we had one trade today. I posted it on my X, and again, I hate to break it to you, but it was again a Model 1 distribution short. However, there were some factors which made this more a advanced Wyckoff Model 1 trade. So I would like to go over that and make it clear to you guys what my exact thought process was and how I managed the trade while being in it, right? So for the people that watched the previous video, so the video from yesterday, disregarding all of this real quick, I told you guys that Pepe loves to do the exact same things twice, and that is run by algorithms. Because what I said here is that last time we tried to break the high from the top down, we had a local distribution, and that turned into a bigger distribution. Okay, so that's kind of what we had. Let's make it let's just call it range. Okay, so last time we had a local distribution with a 1 tap, 2 tap, 3 tap that turned into a bigger distribution that was a 1 tap, 2 tap, 3 tap like this. Well, if you compare this to what we had here, again, we took out the low, we have the potential of this becoming a Model 1, but we need to break structure from the top down. And what we had right here was, again, the exact same. Locally, you had a Wyckoff Model 1 distribution here. That's the trade that we took yesterday. Let's make that red. And again, you had the 1 tap, 2 tap, 3 tap right here. And guess what happened? That turned into a bigger range right here, just like it did over there, where then this tap is the first, the second, and the third. So the exact same thing happened twice. And that's, again, I told you guys yesterday, that's why memory is important. Because if you have a good memory, you see these patterns, you recognize them, and you can trade them better the next time. And even if you don't have the memory, if you journal every night about the price action that day, you will build memory, and you will just have it on paper, so your mind cannot trick you into thinking otherwise. But what we have right here is exactly what we happened right there, and you can see the move that came from that, right? Pretty significant move down. So from here, I was watching this bigger range in general. Okay, I was watching the bigger range right here. So we had our initial range high, we had our initial range low. And this is just the valid range if you pull your market structure from the low up, okay? So market structure from the low up is high, higher low, higher high, higher low, higher high. So we pull it from the top down, reaches the EQ, there's your range, and you have your initial range high, range low, and then you have that first sweep of the range high, indicating that this can be a potential distribution in the making. Especially because we front ran that low here, so there was no signs of any proper accumulations. And later on in the day during London, we got that third sweep of the high, and this is where that kind of more advanced technique comes into play. Because if you look at it on the 15-minute time frame, what happened is that this distribution idea failed and it kind of became like a 4-tap on the 15-minute time frame. And that's when you always have to check what is the highest time frame where this range is still valid on. So on the 30-minute, we have clean market structure, so it is a valid 30-minute range. Same goes for the 45-minute. Same goes for the 1 hour, valid structure in here, and also valid structure up here. And then let's go to the 2 hour. It's also valid 2 hour market structure, valid pullback, valid upwards move, valid pullback, valid upwards move. Let's check the 3 hour. No, the 3 hour not, because we only have a 1 up candle here, and I want 2, okay? That's for proper market structure, you want 2 down, 2 up, and then 2 down, 2 up, That's a repeating cycle. So the highest time frame where this range is valid on is the 2 hour. Well, and if we look at that third tap on the 2 hour time frame, we can kind of neglect this little fella right here because it's nothing. So if we get rid of it on the 2 hour time frame, this is just, your range high, your sweep, and then your move up. It's one move up, a 1, a 2, a 3. So this can still be a valid Wyckoff Model 1 and not a random 4-tap or whatsoever. And I think that's, something that most people don't really know about. And then, of course, you confirm the Wyckoff by breaking structure from the low up between tap 2 and tap 3, which is between this point and that point. And that structure is pretty clear on the chart, low, high, higher low, higher high. So this Wyckoff Model 1 is confirmed once we break that low right here. And that's where we broke it. And you always have to wonder and ask yourself, why did price do it like this? And oftentimes when price behaves like this, there must be a reason. There must be a reason why it had to come up a bit more again before coming down. Maybe, and that's what I look for personally, was there a supply zone? So, and if we go on the left, this was a local distribution, part of a bigger distribution schematic that we were just talking about on the previous breaking the high attempt. And then if I zoom out, I think it was a 2 hour block or like a 30-minute, or I picked range supply. Oh, here, a 45-minute block. So you had a 45-minute OBYM, which is what I call an institutional block because it's an OBYM, order block with imbalance, backed by Wyckoff. So if you go on like the 15-minute and the 10-minute, you can clearly see that we had, locally speaking, you had a 1, you had a 2, and you had a 3. And you had this upwards pull that caused a massive move down. So sellers definitely stepped in here. And in general, it was part of a bigger Wyckoff Model 1 schematic. So, it's an order block backed by a Wyckoff. And that's why I call it an institutional order block. And then guess what happened? We got the perfect rejection from it. So there was a reason for price to come higher, for the market maker to wanting price to come higher because he just wanted to grab more buy-side liquidity and hit more supply to fill his positions even more before pushing price down, okay? So I was noticing this. I was like, oh, this is still a valid Wyckoff Model 1 trade. And then just adding some extra bonuses on the trade, we have a nice return to zone. We do have some demand right here, which is the extreme demand of the range. And with extreme demand, I mean the last demand remaining before taking the range low. So when I say extreme demand, it means that this is the last demand zone potentially holding price up before taking the range low. So I posted on X right here because it was all given in advance, 10 hours ago, I posted Bitcoin and alts are showing clear signs of distributions across the board. We'll be looking for shorts if we get a retrace. And this is a picture on Bitcoin, the 1 tap, the 2 tap, the 3 tap, and the breakout structure. And, looking at Bitcoin, we're kind of in that distribution still. And what I told my Discord guys is just, every chart had a distribution. Bitcoin had a distribution. Pepe had a distribution. Solana had a bigger distribution here, 1 tap, 2 tap, 3 tap. So I just told them, let's scan Solana, Pepe, Matic, and Bitcoin and just see which one gives the easiest entry. And what I was looking at, as I posted here on X, I was looking for that pullback, that pullback for that lower high. And then I would short the lower high. So my initial idea on Pepe was kind of coming up a bit higher and then dumping down, taking the range low, entering some shorts in here, okay? Another extra confluence was that we also broke back inside the volume profile. So this is like a whole range supply now. So I was kind of aiming for price to, kind of bounce from the POC, get in that supply/volume area high area, and then reject from there. How do I know when the lower high for the lower low following this structure is going to take place? You know that the lower high for the lower low is in once price breaks structure from the low up between this point and that point. When structure between those 2 points goes up like this and it breaks back to bearish, that confirms that the lower high for the lower low on the higher time frame is in. Okay? That's what we call internal structure and fractal market structure. So I was just watching for the market structure to break back to bearish from the low up. So zooming in, we have 1 minute market structure. We had a low. We had 2 candles up. And this wasn't 2 candles down because this is an inside bar candle. So I wouldn't count that. So we have a 1 right here. This is where you have your 2 candles down and your 2 candles up. So that makes this your market structure low. So preferably, I was hoping price would, continue putting in those higher highs and higher lows until we hit that resistance zone. But market structure in these situations, when you're backed by Wyckoff, is king because Wyckoffs tend to be aggressive. So maybe price, didn't want more time to develop in here before continuing to dump down. So I was just watching the structure from the low up. And if we zoom in, we actually took the high once more. So that scoots up right here. And then from there, that's where you broke structure. Break of structure. That's where I entered my short, even though we did not hit the preferred zone. Put my stop above the high. And then we target the range low. And just because my entry is kind of in the middle of the range, this purple line is the EQ of the range. So just because my entry is in the middle of the range, it is possible for price, to come to this low and maybe start a bigger range in here until we hit that zone. So that's why I was like eager to take a TP at the extreme demand and then a TP at the range low. Okay. If I had an entry higher up where I would be more safe, I would just wait for the range low to get tapped. But just because I was entering kind of in the middle, because market structure told me to, I wanted to take a TP at the extreme demand and a TP at the range low. So then zooming into what happened, this break of structure confirms that we're going to go to this low. And then right here, we got our back test of the range supply right here, freshly created. So my stop was above that high. And then the moment we back tested it and went lower right here, like this, my stop went from this high to that high, almost being fully de-risked, right? So my stop went from here to here because we're just following this internal structure with the lower highs and the lower lows, right? So previously, this was your high, you broke it, lower high, lower low. Now this is your new high. So I drilled the stop loss down, and then from there, we kind of had a very fast move down, hitting that extreme demand. Now, what developed from there was actually really nice. And, if you're a DJ, you could have taken the short. But right now, the only clear retest POI is this new freshly created one right here. And you broke structure. And now we're tapping into extreme demand. So if I'm just going to let price play out for a bit so you guys can see what happened. There you go. We were bouncing from extreme demand. which is nothing to worry about because we just had such an aggressive move down. Of course, you can bounce from some demand after sweeping all this sell side liquidity, right? So the stop loss was still here around entry, and we already took a nice TP, and this is the place to reject from in order to go to the range low. And the way we came into this should already be screaming something to you guys because, I've been talking about it the past 2 days. And it's a Wyckoff Model 1, where if you follow structure from the top down, it broke back to bullish here. Boom. Bullish break. Lower highs and lower lows until you have that higher high. Expectation order flow is higher low for a higher high. And this is where you have your range. And then look what is so significant about this range. You have your range high, you have your range low, you have your first sweep, and you have your second sweep, indicating a Model 1 redistribution. And, with the context of the bigger Wyckoff going on, it makes sense that we get this redistribution here because price is intended to go to this range low. However, the unfortunate situation in this setup is that we're on the 1 minute already. And there's no structure between this point and that point on the 1 minute to confirm an entry, right? Because if we try to apply the 2 candle rule, there's nothing here. You have 2 candles up, but you have no proper candles down. So it's just one straight shot up, unless you go on the 30-second. So on the 30-second, you actually had this, where this could confirm an entry if you broke it. So that would be the confirmed entry. And then, you can short the retest right here. Short it, stop above the high. And then, yes, you can target the range low, which is only a 1.4. But I would just target this low because that's the overall objective. And then that's what price also ended up doing very quickly. So it's beautiful to see a little redistribution here. I didn't take it because I was already still short, and it wasn't valid 1 minute structure. But for all the second structure guys out there, the degens, this was a valid redistribution. And it just shows you again that Wyckoff is on any time frame, literally on any time frame. We have it locally on the 1 minute and the 3 minute, but also we have it here on the 45, and it's happening everywhere because locally or not locally, on the bigger picture, we're in the big Model 1 tap, 2 tap, 3 tap, right? And then locally here, we have a Model 1, and maybe it turns into an accumulation, and we just had to mitigate some demand here before going higher. And then we had, a distribution here, a distribution here, a distribution here, a distribution in here, and then a distribution here, and then a local distribution. So literally, I'm just on the Pepe chart, but just trading Pepe using, my entry model. It's or just my style of trading. It's pretty insane. It's pretty insane. So it's pretty late for me, but I think I got straight to the point, and I explained it, I think, pretty decent. If you guys have any questions, just shoot me a comment underneath this post. I will reply to all of you. I love all of you. I really appreciate the support. This YouTube channel is just literally, it's full transparency. I'm not trying to portray something I'm not, or somebody I'm not. Upcoming weekend we will have another video of how to backtest, because I see a lot of people struggling with that. So I'm just going to be backtesting. I'm just doing my thing. In the meantime, I love helping other people, so I love helping you guys. If you have any questions, ask me. I love you all. Peace out.